But let's move on then and let's talk about stocks and your stock queries then. Remember, viewers, this is a show where we get your answers for all of your stock related queries. You can write to us on the number that is flashing on the top of your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you already invested in the stock, then mention the buy price, the quantity and the time horizon. In that way, our experts will be able to help you better. And talking about our experts today, we have Kunal Bothra on the technicals, while on the fundamentals, we have Gaurang Shah. Thank you so much for joining us this morning, gentlemen. And let me kickstart the query for you, Kunal, then, because this one is coming in from our viewer. Name is not mentioned, but the viewer is a huge fan of yours and wants to know about L&T Finance as well as Tata Motors. At current levels, does it make sense to go ahead and buy them? Also, what sort of a target are you expecting?
Very good morning to all of you, and thanks to the viewer, of course. So I think in terms of both the stocks, L&T Finance and Tata Motors, I would be very bullish on both of these from a near-term play. Now, there are two reasons for that. One, of course, is the entire NBFC pack, which has been looking very attractive, and we've seen L&T Finance to be a stock which has recovered in a very strong momentum manner. So, the stock from 150 odd levels had jumped up to 170, 75. Recently, the stock went through a 10-15 point correction, but I think that should not deter the trend for L&T Finance, and I think this should be taken as a good level where you can build on to the positions. And same would be the case with Tata Motors. From that negative news flow for the stock almost a month and a half out back, when it had hit 550 mark, there comes a point where the stock or the news flow for the stock starts to abate on the positive side, and we are looking at the stock recovering from 550 levels to now 650 plus mark. So it could be a gradual recovery for Tata Motors, but I think the stock has hit back into that value zone, and 650 odd levels could be a good pivot point for you to buy Tata Motors.
Alright, and that's a take coming in as far as L&T Finance and Tata Motors are concerned. A very good morning to the both of you. I wanted to come to you, Gaurang, with the next one because we do have Karishma writing to us from the National wants to know about Hindustan Copper, 3,000 shares at a buy price of 170 rupees. What do you think Karishma should be doing?
Well, so thank you so much for having me on the show. Good morning to all of you all. So, while we remain optimistic on the entire metal pack, ferrous, non-ferrous, unfortunately, we don't have a decisive coverage on Hindustan Copper. So I won't give a buy, sell and hold specifically, but I would request all the viewers of ET Now that if you eventually understand and decide to invest in the metals universe, ferrous, non-ferrous, whatever be it, please have one thing clear in your mind, that you need to have at least 2-year plus kind of time horizon, given the kind of headwinds, both in terms of tariff flow and in terms of China news flow. There is no doubt that the domestic consumption for ferrous and non-ferrous is steadily going up, and it is likely to go up in the future. Price revision is also a reality as we go into the future. Input cost has come down, thereby ability should improve. But bear in mind that you need to have 2-year plus kind of time horizon. We remain positive on companies like Hindalco, companies like JSW Steel, Tata Steel. JSW Steel more so it is in news flow for all the news flows that we've had. But we remain optimistic on Tata Steel, JSW Steel, JSPL, Hindalco, Vedanta, to name a few.
Right. Kunal, coming to you, this one's come from Shaurya. He's writing to us from Gurgaon. He wants to know about CDSL. He wants to buy the stock fresh, actually. No doubt the stock is reacting today on back of his numbers. That's the reason why we've seen that sort of a correction come in for CDSL. But do you think it's a good option to buy right now and keep it for the next 1 year?
Frankly, I was anticipating or expecting the stock to fall below the 1300 mark because there was a retest and a descending triangular pattern for CDSL, with the stock was forming over the last 8-9 days of the stock consolidating. Now, after this kind of a price action where the stock is down 4%, 5% on the back of results, and then the triangular pattern has completed its near-term target, I would sense that maybe from here on to say the next 3 to 4 percentage points on the downside, I think could be a good process where you could look to start bottoming out and buying the stock. So I believe from current levels of 1275, say broadly towards 1240 mark, this could be a good zone of 25-30 points where you can look to buy CDSL on dips and look out for a comeback yet again, because eventually these stocks, when they form such kind of a retracement patterns, they tend to make a comeback and retest the previous swing highs. So the risk would start to look attractive for you to buy on dips for CDSL.
Other than that's a take coming in as far as CDSL then is concerned, Gaurang. I'll come to you with the next one because we do have Satya Veni writing to us from Hyderabad. Wants to know about a couple of counters, L&T 380 shares at a buy price of 3,700 rupees thereabout, and Persistent Systems 90 shares at a buy price of 5,900 rupees. What do you make of both of these counters? Because Satya wants to know if he should be averaging at this point.
I don't see any harm in case if you're a long-term investor. L&T, diversified company, has been in India for more than 8 decades or so. Has consistently given rewards to long-term investors. We have a buy coverage on L&T from a long-term point of view. And I think all these niche and marquee names in a market like this where you get a correction, and if you do have investable amount from a long-term point of view, then I think it is a must to increase your investment in all those fundamentally strong, sound companies. So have a positive coverage on L&T as far as persistent system is concerned. A mid-cap IT company, we all know what the situation for the Indian IT company is. Earnings have been a little bit below the weather, given the kind of historical, uh, underperformer for the fourth quarter. And along with that, of course, you have the news flow from US in case if it goes into a recession, budgetary discretionary cuts, then the billing cycle for Indian IT companies could go a little bit slower. But we remain optimistic from a long point of view. Continue to hold both, and in case if you have investable amount, proportionately allocate to both and add to it from a long-term point of view.
All right, this one is coming from Ekam Baria. He's writing to us from Hyderabad. Kunal, it's for you. He has 30 shares of Reliance, which he's purchased at levels of 1,260 rupees per share. He wants to know whether he should go ahead and book profits and re-enter at a 10% decline. Are you foreseeing any sort of move like that for Reliance Industries in near term or medium term? At least given the fact that finally it's broken out of the range, Kunal.
Yeah, exactly. And I think that's one of the reasons why you should not be anticipating any kind of a correction as such for Reliance Industries. You're sitting on a good gain, you've entered at a good price. I would believe that if the stock starts to trend in the manner in which it's shown in the last 3 to 4 weeks, this could be a ferocious trend which could happen for Reliance Industries. And remember that Reliance generally has a direct impact in terms of the correlation and the impact on the Nifty 50. So if you're expecting the markets to down, then maybe there could be a case the stock may correct, but I don't anticipate that. So that's why I would believe that hold on to the long positions for Reliance Industries. Don't just look to trade into these kind of names. There has to be a point where you should start building out your portfolios from long term. And once you start taking opportunities when you buy these stocks at lower levels, I think you should just hold them with a lot of patience and with a longer term time frame.
Alright, then that's the take coming in as far as Big Boy Reliance is concerned. The next one, Gaurang, that we have is coming in from Nikhil Sharma, writing to us from Mumbai, wants to know about Indian hotels. For a fresh buy, what do you think of this particular counter?
Well, so I think the hospitality sector is going to see much better times as we go into the future, primarily because of the revision in room rates compared to what we used to have post-COVID and what we have right now. If you listen to the management commentary from most of the leading hospitality companies, there is a likely upward revision in room tariffs of another 15 to 20%. Along with that, you have even positive of income from banquets. And of course, you have positivities in terms of capex. So we have a positive coverage on Indian hotels from a long-term point of view. I think my only request would be that, given the uncertainty in terms of how India is going to react to what Pakistan is involved and what Pakistan has done, don't put all your money at one time. Stagger your investment. Start at current levels and on dips, go on adding on to it.
This next one is coming in from Venkat Rao. He's writing to us from Visakhapatnam. Kunal, for you. He's holding Bank of Maharashtra, 8,000 shares at a price of 68 rupees per share. He is sitting on a huge loss at this point in time. At what price can he average, and should he actually look to average?
See, I would just say to hold on to the stock as of now, because it's into a rebuilding process of the last 4-5 quarters of a major downtrend. From 70 rupees, the stock fell down to as much as 40-45, and now it's recovering back to the 50 mark. Now, the indication I'm watching out from the quarterly charts, I think could probably play out very well for Bank of Maharashtra. Once the stock scales past about the previous quarter high, that level is around 56 mark for the stock. I would believe give it another maybe 2-3 months for the stock, in case if the news flow and the market scenario soothes off further, then you might probably expect the stock to make a comeback about 56 levels. So closing about 56 is where I would believe that the stock can make a strong comeback. That could also be a point where you can consider averaging out. So hold is what I would recommend as of now.
Alright, then that's a whole recommendation coming in as far as Bank of Maharashtra is concerned. But it's time for a very quick breather on the show. When we come back, we continue taking all of your stock related queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all stock related queries. Kunal, the next one that we have is coming in from Shri, writing to us from Bengaluru. Wants to know about Bharat Electronics, 500 shares. Buy price hasn't been clearly mentioned, but what do you make of this particular counter for the near term?
I think it's a very bullish chart. When you look at Bharat Electronics, look at the way the stock bottomed out at 250, 55 zone. From there, it's come back to the 310 mark. The entire defense pack has been looking very charged up in the last 2-3 months. And I think more importantly, Bharat Electronics is now back again to that breakout of the previous November highs. That's around the 318 to 320 mark on the weekly closing basis. So maybe I think if the stock inches up higher by another couple of percentage points, we could be looking at a fresh multi-week breakout for Bharat Electronics. I would suggest it's a good chart. So if you've bought assumingly at lower levels also, you can continue to hold on.
All right, this next one is coming from Ghosh Dada. He has two questions that he's asked, one for Gaurang, one for Kunal. Kunal, what he's asking you is that has he got any person who's not his fan? He's a very popular person. That's the query that you have Ghosh Dada asking you. Has there been any incident like that? Because if you look at the queries that we are getting, the first, all the queries have this first sentence, and that is, I'm a huge fan of Kunal. I'm a huge fan of Kunal. So yes, so that's his question to you. And on the other side, Gaurang, no, not such a tough question for you, but you are his favorite analyst, and therefore he's told me, make sure you ask my query to Gaurang, and he wants to know about Tata Tech. 2,000 shares, he's not given a buy price, but he is at a loss. So he wants to know what should he do. Kunal, you want to go first?
No, I'll ask Gaurang to take it.
Gaurang, Tata Tech.
Well, honestly, I think for technical experts like Kulal and for fundamental experts like me, I think it is always heartening to receive these kind of comments in terms of appreciation. So thank you so very much, Ghosh Dada, for all those kind words for Kunal and for myself. I am taking over Kunal's credit also over here. I hope he doesn't mind. But having said that, I think Tata Technologies, if I'm not mistaken, Sharil, we had a subscribe recommendation for the IPO. And the IPO floor, if I'm not mistaken, again, if my memory serves me right, it was somewhere close to about 685 or 700. From those levels, post-listing, the stock went to 1400, and then we've seen a downward move because of the unfortunate below expectation numbers that Tata Technologies reported. Now, if I have to make my recommendation on the basis of the IPO note, which was again for long term in terms of subscribe to the IPO, I would say continue to hold on. If you have, and I think most of investors would have definitely gotten at higher level in the momentum when the stock went down from 700 to 1400, almost doubled in a matter of about a year time or less than that. But we remain optimistic in terms of the business. IT sector may face headwinds, at least in the immediate short to medium term, because of the both global phenomena in terms of tariffs, etc., and below the weather Q4 earnings season for the IT sector. Having said that, stay invested, and if you have investable amount, I'll again repeat the recommendation on the IPO note subscribe. You can possibly add to it from a long-term point of view.
Alright, then that's the take coming in as far as Tata Tech then is concerned. I'll take the next query to you, Kunal. You're already basking in praises, just like Cheryl mentioned. But the next one is coming in from Nalini, who's writing to us from Hyderabad, wants to know about M&M for an SIP of 3 shares per month for a period of about 12 months. She's looking at a 36-month horizon. Along with that, we also have Satya asking us about M&M Finance. 275 is the buy price that he's mentioned. What do you think about both of these counters?
Well, it's a good strategy for M&M specifically, where you're looking to do a small SIP kind of an investment. So I'm assuming that, of course, it's restricted towards 3 shares in a month. But I believe that, as a process, I think you should try and follow this regularly, for stocks. So, and especially, I think at a point when, stocks go into sharper correction mode, that's the point where you may probably want to, just about add a bit more further, because these are top quality names, and these stocks hardly go into a correction. Just for example, a different stock, Reliance Industries, rarely do you see stocks like Reliance going into a 20%, 30% kind of a correction, and once that happens, you see the stock becoming a very good value buy. Same is the case with M&M. The stock came back to that 24,000-25,000 mark, and from 2,500, the stock has recovered back to the 3,000 level. So this is a swift 20% recovery which we've seen for M&M. That I believe should be a strategy which you should keep an eye on to try and buy further or buy a slight bit more extra in terms of dips. For M&M Finance also, I think it's a stock which has a lot of potential, but surprisingly the stock has disappointed quite a lot. I've been tracking the stock over the last 1.5, 2 years specifically, and there comes a point where the stock comes closer to that 275, 300 breakout. The momentum fizzles out for M&M Finance, and you see the stock going to a recovery or into a correction. So I believe that it's better to try and wait either for a breakout about 300 levels for M&M Finance and then buy the stock about those levels, or else let the stock come back to that support point. 240, 230 is a very strong support for M&M Finance. So either of the two levels which gets reached first, that's where I think you should to add or average.
All right, this next one is coming from Subrata Mukherjee, writing to us from Kolkata. Let me come to you, Gaurang, because he wants to know about Cyient as well as KPIT Tech, and he's mentioned the word he wants to look at these counters for investment purpose. What's your take on both of them? You did speak about Persistent Systems a short while ago, but Cyient and KPIT Tech?
Okay, just one clarification on Persistent System. We had a positive coverage, but I think it is under review post the earnings. So that's just the clarification that I wanted to give. Cyient Limited and KPIT Tech. Now again, both are relatively small to mid category IT companies. Like I mentioned, in terms of headwinds in the immediate short to medium term, there could be possibility of underperformance. So you need to bear that in mind. We have coverage on both on the positive side. You can start accumulating at current levels, and add-on dips would be the strategy.
Right, add-on dips is the strategy coming in as far as that particular counter is concerned. Kunal, I'll come to you with the next one because Tom's Verghese is writing to us about 100 shares of Piramal Pharma bought at a buy price of 262 rupees. What do you make of this particular counter with, say, the next 6 months in mind? Hold or exit?
See, you should hold on to the stock. Just keep your time frame a little bit more extended, because I think 6 months could be a bit of a tough time frame for a stock like Piramal Pharma. It's done exceptionally well. A stock moving from 60 rupees, I remember, I think to 300 plus mark in a matter of, I think, 2 years or so. And post that, the stock correcting. So it's trying to establish a base. My sense is that the base should be sub 200 mark for Piramal Pharma, which means that stock can correct another 5%, 10% further from current levels. I think that could be a zone where you can look to add or average further for Piramal Pharma. So hold is what I would recommend. Maybe that process of correction itself would take another 3 to 6 months, and then you might probably expect the stock to come back into a turnaround mode. So keep a slightly extended time frame and look out for opportunities on the downside. As I mentioned on the levels, as a good play where you can look to accumulate further.
All right, so that's the take coming in on Piramal Pharma. Let me actually take this next one, Kunal, to you. This one is coming from Ignatius from Kolkata. He has 20 shares of UPL that he's purchased at about 6 odd rupees. He wants to know what sort of target or stop losses that he should keep for this one in for a period of about 6 months to 1 year. And he's also thanked you for the recommendation because you just turned bullish on UPL, right?
Yeah, I did. In fact, the stock had done reasonably well. So in fact, I was tracking the stock on a relative strength basis, and the comparison for the stock from December 2024, not just, because many of the stocks have bottomed out in March, but this stock bottomed out in December 2024. So there was this relative strength edge for UPL, and post that we've actually seen the stock do pretty well over the last 4 to 5 months, and from I think 500 levels the stock is now closer to that 700 mark. I think 720, 725 could be a decent target for UPL on the upside. The only concern with the charts for UPL is the lack of consistent momentum. So you see the momentum being a lot more fickle for the stock. You see the stock moving into bursts of couple of days of uptrend, and then going into phases where the stock remains sideways or a little bit more choppy. So that's the only concern with a stock like UPL. I would suggest that say 700 to 720 could be a range where you can look to book profits if in case you're looking at this as a pure short-term trade.
Alright, then that's the take coming in as far as UPL then is concerned. Gaurang, we'll come to you with the next query on the other side of a very short break. Stay tuned. Welcome back. Still watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock Queries, Gaurang. The next one that we have is coming in for you. We do have OSN Reddy writing to us from Hyderabad. Wants to know about Dr. Reddy's labs. What do you think about this one? Buy price is 1,250 rupees. Should he average at this point in time?
Well, this is also one of the sectors which is awaiting clarity in terms of tariff. Having said that, we have been positive on Dr. Reddy's for a pretty long time. Somewhere close to about 1,500 is the target, depending upon whatever earnings we've seen so far. If earnings improve, targets get revised accordingly. Uh, I would say that it's a good opportunity to add to the stock at current levels. In case if the investment is for long term, hold on and accordingly average at current levels.
All right, so that is Dr. Reddy's for you. Then let me take this query coming in from Ramesh. He's writing to us from Coimbatore, a regular viewer of ET now. Thank you so much. He wants to know about IDFC First Bank. He's saying that was the 15% fund dilution in IDFC First Bank, will it erode the investors' wealth? Is it negative for the stock? Gaurang wants to understand it from you. And should he hold or exit the stock? 4,000 shares of IDFC First at 85 rupees per share.
Well, there was challenging time for IDFC First Bank with its exposure to the MFI segment, and this was very well articulated in the earnings that we've seen, especially in the second and the third quarter. And post the fourth quarter earnings, there has been more clarity that has been given out, and that is one of the reasons why we've seen the stock recover from the sub 60 levels. We have a positive view on IDFC First Bank again from a long term point of view. 71 is the target, but I'm quite sure with the kind of focus that the management is putting in terms of recovery, improving the asset quality both at the gross and net NPA, and provisionings coming back, I think long term this could turn out to be a good investment idea, subject to you have a little bit of higher risk appetite. Hold on and maybe closer to 60 again. If somebody's gotten at higher levels, want to average, I think closer to 60 would be a decent zone to average as well.
All right, so that is IDFC First Bank for you and the take coming in on that particular counter. Let me take the next query. This one is coming from Datta, writing to us from Andhra Pradesh. Havells, he's saying he's given better than expected response this quarter, given the fact the earnings have been good. Their rural strategy seems to be working well. But what's your take, Gaurang? Is that all that you need to watch out for when you talk about Havells? I'm not sure if our investors already invested or our viewer has already invested in the stock or no, but how should one read into Havells' number? And also, should one actually stay put with this one if already invested in it?
Well, if you are definitely, Cheryl, I would advise to stay invested. There was disappointment in the earnings that was delivered undeniably. But look at the opportunity that lies for not only companies like Havells, but companies which are into basically, consumer durable, white good appliances. So be it Voltas, be it Symphony, be it Blue Star, or be it Havells India. We've been maintaining a positive view. We have a buy recommendation. I think this correction is a big opportunity for those who want to invest afresh, point number one. And those who have invested at higher levels, if you want to take opportunity of this downward correction, add at current levels, approximately 1,900 or thereabout is the target from a long-term point of view on Havells India.
That's the take coming in as far as Havells India then is concerned. Kunal, the next one that we have is coming in from R. Ganesh for you. Bengaluru is where he's writing in from. Wants to know about three counters for fresh buys, ITC, SBI and Maruti Suzuki for the long term. What do you think about all of these counters?
See, ITC we've been very bullish on, so I would continue to maintain the bullish stance. And if you're a long-term investor, it's a good zone where you can look to even average further, just about closer to say 400 odd mark. But SPI and as as well as the second stock Maruti, which you've highlighted, I think both these stocks I would believe are also at the cusp of a turnaround of sorts on the short to medium term charts. Now SPI, for example, the stock had gone through a correction of more than 15%, 20% in the last 6-9 months. The stock is trying to establish a base or pivot around the 800 level. It's still trading, I think, sub the 200 moving average or just closer to that average, for the stock in the near term. So I believe that the stock can see a decent recovery as well as a potential turnaround. If the entire banking stocks or the bank nifty has to recover, then you can't be in a zone where SBI remains a huge underperformer for a prolonged period of time. So I think in that sense, the stock could make a decent comeback. And Maruti, I think, is a classic case of a turnaround stock on the short to medium term charts. We've been doing this comparison between Maruti, M&M, Tata Motors, and how Maruti started to stand out in terms of the price performance, especially in the last 2-3 weeks of this price uptrend. The stock has already seen 1,000 points kind of a jump in the last 2 to 3 weeks. So maintaining this up move for Maruti, it's a good buy from current levels, as well as in case if there is any kind of a dip for all three of the names.
All right, so that is the take coming in all of these large cap counters. Let me actually club two queries. Both of them are on defense space. One is Ramanji. He wants to know if it's the right time to invest in the defense counters. And the other one is from Shankar, who's writing to us from Tuticorin. He wants to know about 6 to 8 months outlook for HAL, Cochin Shipyard and JRSC. Let me actually take first part of the query to you, Gaurang. Is it the right time to go ahead and invest in defense space? Because given the fact what is happening right now, the geopolitical concerns, and that's one of the reasons why people are also looking at the defense space afresh rather once again. Do you think right now you should look at it?
So we have been extremely positive on the defense space for a pretty long time, Cheryl, and we continue to do that. Defense is a play for 3 years, 5 years kind of time horizon, because it takes a longish time horizon in terms of getting meaningful returns on your investment from defense. Cochin Shipyard, BEL, BHEL are some of the names on which we have a positive coverage. Other than that, this is not a recommendation, but companies which are equally strong in terms of performance. So you have names like Hindustan Aeronautics, Mazgaon Docks, Garden Reach Shipbuilders, Bharat Dynamics, BEML. These are also very strong competitors in terms of getting new orders from the government, not only catering to the demand from domestic market, but also capabilities of export. I will again reiterate, this is not a recommendation, but just a reference to which are the other strong companies in the defense sector.
Right. Kunal, let me come to you then. Let me take this query from Shankar from Tuticorin, because he has HAL about 100 shares at a price of 4,220. Cochin Shipyard 80 shares at a price of 1,557. He also has Garden Reach. The buy price is 1,690 rupees per share. Wants to know what sort of target should he eye for all of these three counters that he is sitting with a profit right now.
So I'm assuming that you're looking at a 10% kind of a profits on GRSC as well as on HL thereabouts, and slight lower for your investments on Cochin Shipyard. So it all matters in what perspective you're looking out for. So for example, if you've taken this as a trade, just on the basis of the event, this could probably be just about a catalyst to the event could be a catalyst to the stock price movement. What you have to look out for is that these stocks have bottomed out in the month of Jan Feb, when there was a point where the pessimism was extremely high, and prior to that the stocks have already gone through almost like a 10-12 month correction, and some of them I think have corrected more than 40-50% from their 2023-24 highs. So I think in that perspective, I would believe that we are looking at a phase where the defense stocks could do exceptionally well. Now, what happens is if you start looking out for a 10%, 15% swing, these stocks would provide those kind of swings and you can book your profits. But once the momentum kicks back into these stocks, you see the stocks moving up 5-10% in just a matter of few days or few weeks. So there is a left out feeling which happens. So I think the best strategy over here is do a part booking profits of these stocks when you get 10-15% on the upside, and then look to redeploy the cash whenever these stocks go into a correction.
Alright, then it's time for a very quick break on the show. We'll continue taking all of your stock related queries on the other side.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and as you can see the numbers flashing at the bottom of your screen, that is Mahindra & Mahindra's numbers that have just come out. If you look at the profit, it's coming at around 2,437 odd crore rupees. Our ET Now estimates was that it would be around 2,316 crore rupees. If you look at the revenue numbers, it's coming at around 30,353 crore rupees. We had expected it to come around 30,095 crore rupees. So that's the number coming in on the surface. If you look at it, the profit is higher by about 21% on a year-on-year basis, and the revenue is higher by about 24.5% on a year-on-year basis. We're just waiting for the margin figures and the commentary from the management. We have Gurmeet Chadha who's joining us right now. Gurmeet, hi. I know I'm not sure if you got the time to actually check out the numbers, but on the surface, how are the numbers looking to you, at least for Mahindra & Mahindra, because the profit is coming a tad bit above ET Now estimates?
Yeah, would want to wait for more details in terms of the breakup between tractor and SUV numbers, also the margin. But yeah, looks good. Optically, first cut I think looks good. And if you go with the FADA data and monthly numbers we have been getting, M&M has been outperforming the peers. Even in April, they did comparatively much better than the peers and clearly gaining market share. In fact, I'll not be surprised if the SUV market share now is closer to 25%. And they have been indicating good volume growth in tractors as well. So, a little bit more details awaited, but yeah, looks in line, as far as the estimates go.
In line with the estimates, and yes, given the fact that the company's focus has been on actually pushing ahead with their SUV strategy, and the fact that they have also gone into the electric segment as well on that particular front, tractor numbers are also crucial for this one. EBITDA is coming at around 4,682 crore rupees, which is higher on a quarter-on-quarter basis as well as on a year-on-year basis. The margin figure is about 14.9% is what we're getting right now, Gurmeet, versus 14.6% on quarter-on-quarter basis. How are you actually looking at the margin numbers? If as per our calculated numbers, 14.9%, it is much above the ET now estimates.
Yeah. If it's closer to 15, I think Street will take it pretty constructive. Also, I think going forward with input prices, commodity prices being lower, raw material inflation being softer, there will be more impact because last year was a tougher year as far as the input inflation goes. So would want to also look at what the management commentary looks like. This is one business which is relatively less impacted with tariffs, considering their overall mix, and it's more domestic and also a play on rural. So because if you see tractor sales going up is a sign that A, the previous crop was good. Second, the outlook on the coming crop is also positive. So it indicates well from a overall rural economic uptick as well. So I think the margin picture looks pretty good first cut.
Look at the Q4 farm equipment revenue, Gurmeet, it's coming at around 6,428 crore rupees as against 5,227 crore rupees a year ago. The automotive revenue, it's coming at around 24,976 versus 20,018 crore rupees. Now, how are you reading into the tractor numbers?
Yeah, I think looks like an all-round good show, as I was telling you, and if I remember, I think the margin was more like 13 odd percent. So there's a good jump in margin. So I think now clear leadership is getting established, both in four-wheelers and two-wheelers. We've seen TVS doing much better than Hero and Bajaj. Here we are seeing probably M&M, outpacing both Tata Motors and Maruti. And as I said, they picked the trend right, both in terms of premiumization, in terms of movement towards SUVs, and with tractor and farm equipment numbers doing well. I think it looks like a good all-round show. And I think with Anish coming in, I think what we've also seen is very good capital allocation. I think the cut down on loss-making JVs. There's one concern always which had was M&M's capital asset allocation. There was initially some bit of a disappointment when they bought some stake in RBLM, I remember. And then they clarified that was more a financial investment and not a strategic one. So that calmed the nerves. So I think it's good capital allocation, great focus, and I think great R&D. I think some of the new models which are coming in the EV space, in SUV space, have really surprised everyone.
I used to say that among the four-wheeler majors, M&M would be your top pick.
Yeah, it has been. It has been for a while. And when stock price did correct due to tariff issues, I remember it was almost 2,400. They actually added a little bit, being a little contrarian, because as I said, their exposure to global supply chain is a lot lesser compared to, let's say, a Tata Motors. Tata Motors, from a valuation perspective, obviously at current prices, valuations are very reasonable. If you remove the one-time gain which they got last year, you're still at 13, 14 times. So valuation-wise, maybe yes, but you'll probably have to wait for more clarity on tariffs and shipments of JLR to US and other markets.
All right, then we leave it there. Thank you so much, Gurmeet, for actually joining us, giving us your first take when it comes to Mahindra Mahindra numbers. If you look at the numbers, they are all-round beat with now estimates. The stock also reacting to those numbers. Quickly, your take, Gaurang, on the numbers?
Well, honestly, I think they have been much better than what we had penciled down, Cheryl. And my sense is that this particular stock should see some amount of targets getting revised. I hope there is no one-off or no extraordinary item. If that's not the case, then definitely encouraging numbers. And with the kind of outlook that the Met Department has given, sense is that the agri and tractor related business should do extremely well as we go forward.
Alright, and that's Gaurang's cut coming in as far as M&M's numbers are concerned. But that's all we could pack for you on this edition of Buy Now, Sell Now on ET Now. Thank you so much for tuning in. Markets at Noon takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.